guys, welcome to my channel in 2021. This is going to be a big year ahead of us, and let's see what 2021 will bring us. So 2020, what a year, what a pandemic, everything about 2020 was just completely out of the park. No one realistically expected it, and to be honest, a lot of people could have made a lot of money and a lot of people could have made more money. And I don't reckon a lot of people made as much money as what they probably could have for 2020, considering where we went from to and where it actually ended up for 2020. So, here we are. This is for entertainment purposes only. Do not take this as advice, as I am not a finance advisor. Do your own due diligence, as that's the best way to go about this. So, 2020 was probably a massive year for a lot of people, and a really bad year for a lot of other people, sadly. We're in WA here, so we're pretty lucky with the circumstances we were put in and what we have, considering how far spread out WA is. So in 2020, I started investing, actually. I started in March. So I was probably put in a really good circumstances in terms of that side of stuff. However, I didn't have a lot of knowledge when I was starting. So I was investing in companies that I didn't fully understand. I thought would have a really good return because of where the pandemic was, with travel shut down and all that sort of stuff. So that's the sort of sectors that I actually started in, was travel, and it only got worse. I did make some massive gains in a matter of weeks, but to be honest, I think that was pure luck more than anything. So as 2020 went along, I started to change my investment strategies in terms of where I was putting my money, how much I was putting in, etc. Obviously, I did make quite a few big returns. To be honest, I started to have more of an idea of where my returns were coming from and how I was doing it, in terms of calculating my methods as well of actually doing it, rather than just saying, oh, this stock's gone down, so I'm going to put money into it. And actually understanding why share price has gone down, or etc. Like, it could be just emotion for why the stock market has actually pushed the share price down, or it could be a calculated method for why the share price has gone down. So as 2020 came to an end, I started to understand where and how I could make more gains in a comparison to where I started back in March for 2020. So to give you guys a bit of an idea, one of my first investments was actually Qantas back in March. I purchased it just under $3 a share. I actually moved out of the company a matter of weeks later with just over 20% gains. So look, in terms of that side of things, to be honest, I think I was just very lucky with where I actually got my gains from. Considering, look, to be honest, travel still hasn't realistically opened up. We are still closed down like quite a bit. You can't just travel willy-nilly because you want to go on a holiday. So we really are trapped in that side of things. So overall, for 2020, I actually made an 82% return on my money that I fully put in for 2020. So my second investment after Qantas was actually Westpac Banking Corporation. They look, all the banks really got pretty well banged up, to be honest, like given the share price where everything was. Now I know a lot more, especially about the banking sector, as to what I knew back then. I pretty well just assumed, and a lot of other people as well, especially people new to investing, see like the share price of a big blue chip company tank by 30, 40, in some cases 50% of where they were trading from back in February. And to be honest, that's what I was calculating my method on. And to be honest, it's not a very good way to do it, because the pandemic did change the way that money is moved around here in Australia and the rest of the world as well. And to be honest, I don't think banks are going to fully recover to the way that they were before the pandemic. And as we've all seen, the Reserve Bank just continuously, month after month, well, not necessarily month after month, but every 6 months or so, they are slashing the Reserve Bank interest rates. At the moment, it's sitting at 0.1% to the Reserve Bank of Australia. And that's just one of those things that, as we start to go on, I'm starting to see less and less chances of making more money in the banking sector, because there's more population in the rest of the world. So, to be honest, money needs to be diluted somehow, and the banking sector, in my opinion, is probably, it's a guaranteed money in terms of investment, I reckon, but I don't reckon the returns are going to be as high in the future as what we saw between 2008 and 2020 as returns from the banking sector. Buy now, pay later schemes. So big companies like Afterpay, ZipPay, and a lot of other companies like that. Afterpay in particular, look, I made some massive returns. I think it got down to about $9 something a share. So you could have easily 10x your money in a company like that. Now that is a classic example of why I believe there is less and less money being able to be available as a return of investment in the banking sector because of those types of setups and schemes. I'm not big in terms of using Afterpay and ZipPay. I think if you need to be able to use that to pay for something, you probably shouldn't be purchasing the item. Yeah, that's just my honest opinion about it. But like as an investment, that is the way of the future, in my honest opinion. There's not really much else to really say about that, unfortunately. So, stock price predictions and analysis. That's what this channel is mostly about. In terms of personal finance as well, I'll also cover a little bit of that. ETFs, what ETFs to buy, returns on an average investor. That's probably one of the biggest things that a lot of investors need to actually understand the most. Because I see a lot of people say, oh yeah, I received a 20% ROI or 50% or whatever. And to be honest, in reality, if you Google what does the average investor make on their money, it is somewhere between a 2 and 5% return. Now, in terms of that, to be honest, the average investor is actually best off buying an ETF or an index tracking fund. Like, if you had the option of having a 10% return on your money or the possibility of having a 20% return, I think you'll find a lot of people would choose the possibility of having 20% return, not the guaranteed 10% return. And that's where a lot of people get caught out and get a little bit messed up in that side of things. They're choosing companies that are a little bit speculative of and don't fully understand where the share price will go in the future and why it will go there. I see like a growth rate of 20% on Yahoo Finance or companies like that, and they're assuming that that's what's going to happen to the share price. In reality, it could already be calculated in to the share price as well, so that's something else you also need to try and work out and figure out for yourself as well. So in terms of that side of things, I will cover a lot of why I think the average investor needs to actually look at index tracking funds as an investment, because most people cannot outperform the market. The market normally tracks somewhere between 7 and 10% per year, before taxes, obviously. You've got to take that into account, depending on your tax rate and all that sort of stuff. So you've also got to calculate all that into perspective. And to be honest, as something that I do invest in is ETFs. Obviously, I did say earlier on in the video, I did receive an 82% ROI. And to be honest, I reckon I could have achieved more if I knew what I know now back in March of 2020. To be honest, like I was saying, the average investor returns 2 to 5%. That's only just above inflation, which is pretty sad, to be honest. When you talk big hedge funds as well, they also struggle to beat the market. You can Google them, they'll also do the same sort of returns because they're trying to beat quarter over quarter, not long-term gains. And to be honest, if you're thinking about a share price in a month's time or 2 months' time, even a matter of days, you can't control any of that. You cannot calculate what a share price will be worth in a month. If you can, let me know below in the comments. But yeah, honestly, there is no physical way to control or know 100% what a share price will be worth in the future. There are ways you can calculate what a share price could possibly be worth on estimated growth rates down the track, but you can't guarantee it. So it's something you also need to understand and believe in yourself and within the company that you are investing in. Passive investing, that's probably another one I'll probably cover quite a bit on the channel, probably not enough of, because I prefer to be the active investing side of things. I believe for the average person, they need to really concentrate on passive investing, because it's just easy. If you contribute $50 a week, if you rock up all the time, you will see those gains. Not necessarily if you do $50 a week. If you chuck that $50 a week into another bank account separately for 3 months, and every quarter you put that directly into an ETF or an index tracking fund, directly into the market, they are the best and easiest ways to forget about your money and receive long-term gains. So it is going to be one thing that I will try and cover in the channel. It's probably something I won't cover enough of, because I found on YouTube that a lot of people don't actually want to see that sort of stuff, unfortunately. Just from watching other YouTubers, comments below, likes, subscribers, all that sort of stuff. So I will cover a little bit of it. I'll try and get as much information as I can into those videos to try and get you to understand why I believe it is the best investment strategy for the average investor. When I say the average investor, the average punter, like you and I, retail investors. So, stock analysis, price predictions, and buy recommendations, also sell recommendations. They're going to be some of the things that I will cover on this channel. They are going to be things that I will do buy recommendations. I'll try and do one at the very least once a month. Could be on the Australian Stock Exchange or the US Stock Exchange as well. I will also put ETFs in the buy recommendation as well. They're probably going to be a little bit interesting. I probably won't be able to do them in the same way, because I believe ETFs, look, you can buy into ETFs as an active investor if you'd like, but I prefer to just show up every 3 months with $500 or $1,000 or a couple of $1,000, whatever you've got to put in, and just continuously put that sort of money into ETFs, or to be a passive investor. So yeah, I will be doing price predictions, stock analysis, and buy recommendations, also sell recommendations of stocks that I do believe and track on this channel for my own personal side of things as well. Right, so the last topic that I wanted to cover is value investing. This is by far, I believe, the best returns that you can guaranteed have. That second to an ETF. ETF is guaranteed returns in my honest opinion, but value investing is the best way, in my personal opinion, how I should go about it, but it doesn't work for everyone. It's one of those things you kind of got to understand and know what to do, because it does require a lot of research to have a lot of value investing going into a company. Like for myself, to be honest, it probably takes me about a month, just over a month, to actually analyze properly for value investing in a company. And just because I've done a lot of research in the company, when I say value investing, does not mean I will buy within that company, because it is value investing. We need to calculate what a share price will be worth in the future. We need to work out if the management team can get the return of investment or the gains that Yahoo Finance, Simply Wall Street journalists, MSN Money, and all those sorts of places do believe that they will return. So it's something that you've really got to try and deep dive into in the management team of the company. Try and track down what the management team has done previously in terms of their job roles, other jobs, what it was, whether they actually got returns or whether they were actually looking after their own pockets. Especially like if you see a insider buying into a company, like a CEO or a chairman, something like that. If they are, that is a very good chance that they also believe in the company and they are also going to try and thrive the company, because it's only to their good stake that they actually do try and push the company to new heights, because they have an interest within the company, not just a payroll at the end of the day. So if you also want to see possibly some of the returns that I can and have received in the past for myself, you can follow and do whatever you want with the information that I give you there. Please don't take it as finance advice, because I'm not a finance advisor. So it's just something you have to sort of try and understand for yourself. But hey, I could make a bit of money and you could make a bit of money too. So it's probably one of those things that if you're new to investing or want to try and understand a little bit more, follow the channel. And yeah, we'll have quite a bit of stuff to talk about in the future as well. And hey, welcome 2021. What a year 2020 was. Okay, cheers guys. See ya.